Welcome to House Lux Estate, your go-to channel for all things finance and real estate. We're here to offer valuable insights into the often mystifying world of financial planning and property acquisition. With a focus on financial literacy, we aim to illuminate the path to a secure future, highlighting the importance of planning ahead. Whether you're a seasoned investor or just starting out, we're here to make the complex simple. Stay with us as we dive into the process of planning for financial independence by 40. Before we dive into the how, let's clarify what financial independence means. It's a term that's been thrown around a lot, but what does it really signify? In essence, financial independence is a state where you have amassed enough personal wealth to live your life on your terms. Imagine not having to work every day, not because you don't want to, but because you don't need to. You don't have to work actively for basic necessities like food, shelter, or clothing. You're not tied down by financial obligations, and you're free to pursue your passions without the constant worry of how to pay the bills. It's about having the financial freedom to make choices that allow you to enjoy your life and not just survive it. Now that we understand what financial independence is, we can explore how to achieve it. The first step towards financial independence is becoming a master of saving and budgeting. Now, this might sound simple, but it's often easier said than done. However, understanding the importance of these two key elements can make all the difference in your journey to financial freedom. First, let's talk about saving. It's not just about putting aside a part of your paycheck every month. It's about creating a buffer for yourself, a safety net if you will, that can protect you from unforeseen financial emergencies. It's about securing your future and ensuring that you're not living paycheck to paycheck. But saving isn't just about stashing away money. It's also about understanding the power of compound interest. Think of it like a snowball rolling down a hill. The more it rolls, the bigger it gets. Similarly, the money you save today will grow over time, thanks to the magic of compound interest. Your money is not just sitting idle, it's working for you, multiplying and getting you a step closer to your financial independence. Now on to budgeting. Budgeting is not a restriction, but a tool that gives you control over your money. It's about understanding where your money is going and making sure it's being spent in a way that aligns with your financial goals. A strict budget doesn't mean depriving yourself of everything you enjoy. It means prioritizing your spending and cutting back on the unnecessary expenses. Budgeting allows you to see the big picture. It helps you understand your financial habits and gives you the power to change them. It's not about cutting corners, but about making smarter decisions with your money. It's about ensuring that you're not just earning money, but also keeping it. In the grand scheme of things, saving and budgeting are like the building blocks of your financial independence. They lay the foundation on which you can build your wealth. They give you the power to control your money instead of letting your money control you. Remember, each penny saved is a step closer to financial independence. So start today and take that first step. You've got this. Being financially independent isn't just about saving. It's also about making your money work for you, which means investing. The world of investing can seem intimidating at first, but it's really about finding opportunities to grow your wealth over time. Consider the stock market, for instance. Buying shares in a company essentially means you own a small piece of that business. As the company grows and profits, so does your investment. Remember, though, that the stock market can be volatile, and it's important to do your research before diving in. Bonds, on the other hand, are a type of investment where you lend your money to a government or corporation for a set period of time. In return, they pay you interest. Bonds are generally considered less risky than stocks, but the returns can also be lower. Then there's real estate. Buying property can be a solid investment, especially if you're planning to rent it out for a steady income stream. Plus, real estate often appreciates in value over time, which can be a boon when you decide to sell. Now, let's talk about diversification. This is the practice of spreading your investments across various assets to reduce risk. Think of it as not putting all your eggs in one basket. If one investment doesn't perform well, others might, balancing out your portfolio. Risk management is another crucial aspect of investing. This involves understanding your risk tolerance and making investment decisions accordingly. Some people are comfortable taking on more risk for the potential of higher returns, while others prefer more conservative investments. Remember, investing isn't about getting rich quick. It's a long-term strategy that requires patience and diligence. Regularly review your investments, adjust your strategy as needed, and stay informed about market trends and news. So, start exploring your investment options today. Whether it's stocks, bonds, real estate, or a mix of all three, make sure your money is working for you and moving you closer to your financial independence. Investing is a long-term game and patience is key. Another crucial factor in achieving financial independence is creating multiple income streams. Now, you might be thinking, but I already have a job, isn't that enough? Well, not exactly. Having a single source of income is like putting all your eggs in one basket. If something were to happen to that basket, let's say it gets knocked over, all your eggs would break, leaving you with nothing. In the same way, if you lose your job or if your business fails, you could be left with no income at all. That's where multiple income streams come in. They serve as a safety net, providing you with a cushion to fall back on in case one of your income sources dries up. But that's not all they do. Multiple income streams also accelerate your journey towards financial independence. Imagine this. You have a full-time job, but you also have a side hustle that brings in a little extra money each month. Maybe you're a freelance writer, a graphic designer, or you sell handmade crafts online. Now, what if you also had rental income from a property you own? Or what if you had a part-time job on the weekends? Suddenly, you're not just relying on your full-time job to cover your expenses and save for the future. You have several income sources working together to help you reach your financial goals. So, how do you go about creating these multiple income streams? Start by identifying your skills and interests. What are you good at? What do you enjoy doing? Then look for ways to monetize these skills and interests. You could start a blog, offer tutoring services, rent out a room in your house, or invest in dividend-paying stocks. The possibilities are endless. Remember, the more sources of income you have, the faster you'll reach your goal. So, start thinking outside the box and get creative. Your path to financial independence might be closer than you think. The path to financial independence is not a straight line. It requires consistent reevaluation and adjustment. Imagine embarking on a road trip. Would you simply set your course and never check your GPS again? Of course not. You'd regularly look at your map, adjust your route based on road conditions, and perhaps even change your destination if you discover something more appealing along the way. The journey to financial independence is no different. Just as you'd have regular checkups for your health, it's essential to have consistent financial checkups too. These will help you assess your progress, understand where you stand, and make necessary adjustments. Maybe your investment strategy isn't yielding the results you anticipated, or perhaps an unexpected expense has thrown your budget off track. Being aware of these changes allows you to adapt and overcome. The key is to be proactive rather than reactive. Don't wait for a financial hiccup to force a reassessment. Instead, schedule regular financial checkups. This could be on a monthly, quarterly, or even annual basis, depending on your comfort level and financial complexity. Remember, your financial plan is not set in stone. It's a living, breathing entity that evolves with you and your circumstances. So, if you find that an income stream isn't as profitable as you'd hoped, don't be afraid to cut your losses and find new opportunities. Stay proactive and adaptable, and financial independence will be within your reach. We've covered a lot of ground today, and we hope you're feeling more confident about your journey towards financial independence. Let's quickly revisit the key points we've touched on. We began by understanding the concept of financial independence and the importance of reaching it by 40. Remember, it all starts with saving and budgeting. Learn to control your spending and put aside a portion of your income regularly. We then delved into investing wisely, which is crucial to grow your wealth over time. Don't forget about diversifying your portfolio to minimize risk and maximize potential returns. We also explored the importance of building multiple income streams, because relying on a single source of income can be risky. Lastly, we emphasized the need for consistent reevaluation of your financial plan. This will ensure you stay on track and make necessary adjustments to achieve your goal. Don't forget to subscribe to HouseLux Estate for more insights into finance and real estate. Here's to your financial independence.